Good morning, guys. Happy Friday. We moved up on the jobs report on the futures. Of course, lower hourly earnings than expected, and that's good. We want job wage growth to be moderating. And yet, look how we opened here. We opened basically down, and only a few defensive sectors were on the upside, and even that now down. Utilities opened up, consumer staples opened up. Healthcare opened up. These are your three classic defensive sectors. They're holding in there. Everything else is generally weaker. And of course, the KBE, which is the subject of a lot of attention, down again today. So it's been a really rough open. Let's just take a look at some of the big large regional banks. Silicon Valley still halted. We are news pending. We're waiting for that to open right now. But Zion's down again. M&T, First Republic, Huntington Bank shares down, 16, 17% this week. Zion's down close to 30% this week. These are rather breathtaking. These are not small. These are what I call super regional banks of significant market capitalizations. If you take a look at the KBE, the bank index down about 16% this week. That's the lowest close we've seen for that since, well, it's December 2020. So this is quite a big move down and rather unexpected, I have to say. The question is deposit risk. I've been joking about my mother for the last 2 weeks. She called me several weeks ago saying she was at her bank and she was talking to the tellers and she was going to withdraw money from her bank deposit account and put more into CDs. And she'd been interested in doing this, and they have her calling. They're calling her when things are lower or when the deposits rates might be better or higher. And the bottom line is my mother's the leading guard about all of this. She's aware of this. So Treasury yields are competing with bank deposits. My mother has been calling me. If that's not a yield top, I don't know what is. When it gets out there into your level of your mother, that's when the public's really aware of things. So deposits costs are going up. And that's pressuring, deposit costs are going up, and that's pressuring things like net interest income, net interest margins, and that's a problem for the bank. So there's an additional issue out here on top of that, remember, and that is that quantitative tightening is also having the effect of withdrawing money from the banking system. That's also essentially putting pressure on deposits as well. So you've got yields going up, competing, and quantitative tightening at the same time. So what you want to take a look here is the Russell's been under some pressure right now, and a very good reason, because the Russell 2000, small banks are really the heart of the Russell 2000. They're about 1/4 of the size of the weighting in the Russell 2000. Everything else is really just small. Believe it or not, technology is a very, very small part of that, as opposed to, for example, the technology weighting in the S&P 500, where effectively it's over 30%. So this is one of the reasons the Russell 2000 has been underperforming. And you look at some of these small banks. There's a lot of banks out there with $2 billion, $3 billion, $4 billion in market capitalization that have been under a lot of pressure this week, down more than double digits at this point, down more than 20%. So that's really where you want to look, the strength of the deposits in a lot of these smaller banks. Carl, back to you.
All right, Bob. We'll see you in a little while. Busy day here. Bob Pisani.